Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Palantir Technologies and Nio Stock. In this video, we will be analyzing 4 articles, to where the first one is titled, An Intrinsic Calculation for Palantir Technologies Inc., ticker symbol PLTR, suggests it's 49% undervalued. So we'll be going over this fair value analysis to determine if this intrinsic calculation is actually accurate, and of course I will be adding my own opinion to that. After that, we'll talk about the latest news update for Palantir Technologies regarding a message from Ukraine, which should increase their overall share price. Lastly, we'll go over their latest price targets and price predictions, and we will be analyzing more of a bearish article, because the first article is very positive, the second article is extremely bullish with their news update. However, this article really represents the bear side of this overall company, and I thought the author did a very fair yet effective job in delivering the risks that investors need to be aware of when thinking about investing into Palantir Technologies. After that, we'll move on and talk about Nio Stock, ticker symbol NIO, regarding why it has fallen 58%, and we will also discuss if this is an opportunity to buy Nio shares at this new discounted price. So we'll be talking about their price targets, latest news updates, upcoming catalysts, and what the stock price of this company could be in the future, even though it is increasing today by almost 6%. So for more videos just like this one, don't forget to go and annihilate that like button, especially if you want more videos on Palantir or Nio. Go ahead and comment your personal price targets for both Palantir Technologies and Nio Stock down below. Subscribe for more videos like this one, and don't forget to become a member by pressing or tapping that join button right next to the subscribe button so you can support me personally for as little as 99 cents, because that's what keeps me here on YouTube. But don't worry, if you can't swing that, just subscribe and you will still get these videos for free. But with that being said, I say let's jump right into today's stories, starting off with Palantir Technologies and their intrinsic calculation for their overall fair value right now. Palantir Technologies, as you probably already know, is a big data and analytics company which also specializes in artificial intelligence and large language models. This company has 2 main segments. One is their commercial enterprise segment, and the other is their government agencies segment. Palantir Technologies is a behemoth in their respected industry, and they really face no direct competition regarding how advanced their software platforms actually are. So to estimate their intrinsic value, we're going to take the forecasted future cash flows of the company and discount them back to today's value using my favorite model, or at least one of my favorite models, which is the DCF model, also known as a discounted cash flow model. Now, you do need to make sure to understand that assumptions are going into our overall calculations. For instance, first we need to address the 10-year free cash flow forecast for this company, also known as their FCF forecast, and we have to do that from 2023 all the way until 2032. Here on screen, you can see all of the assumptions we are making regarding their future calculations, and we are trying to use analysts' estimates to do this, but every time analysts project past the next 12 months, clearly we are making large assumptions here. For instance, you can see on screen that we have 6 analysts supporting our 2023 target, another 6 analysts supporting the 2024 estimate, another 2 analysts for our 2025 FCF forecast, and then 1 analyst for 2026 and 2027. And then from on that point, we just have to make assumptions. So from 2028 all the way until 2032, we are making assumptions on their overall estimated percentages and growth values. However, with that being said, you can see the overall metrics we are using here on screen. And once we do all of that, we can find that their present value of a 10-year cash flow is around $17 billion once we do all of the math here. Now, I do want to bring your attention to what we are discounting them at, and we are discounting them at 8.1%. And this is another assumption that I want you to be aware of, because we are building this into our overall model. Again, I don't want to bore you with any of the actual in-depth math, but we're going to try to calculate the terminal value, also known as TV, and the present value of terminal value, which is abbreviated as PVTV. So after we calculated terminal value, we are going to plug that into our present value of terminal value equation anytime TV pops up, which would be right there. By doing this, we can actually calculate the present value of terminal value, which is $45 billion. And if we use this $63 billion market cap, we would arrive at essentially a $30 price target for their overall fair value and intrinsic value estimates, meaning that this company is around 49.6 1.3% undervalued according to this overall metric. Now, what do I think about these calculations? Honestly, I'm not a fan of the assumptions that this author made in his overall analysis pertaining to 2028 till 2032. I think those are really risky, and even 2026 and 2027, we are only using one analyst for this. I do think it is more credible when we use 2023, 2024, and 2025 because we used 6 analysts, or at minimum 2 analysts, which agree with various forecasts. On top of that, the discount at 8.1% is a little iffy, but overall, this is a solid logical valuation, although I personally wouldn't agree with this. I think it's rather too high for a fair value estimate of this overall company, and people can disagree with each other because if you look at Morningstar, they give this company around a $9 price target, and I believe they also use a discounted cash flow model or maybe some other model to estimate this overall fair value, but I would love to hear which one you gravitate more toward, whether it be that $9 fair value price target or that $29.65 price target, because again, depending on your assumptions, you could end up with either one of these, so these are both very possible. Essentially, this just gives us an educated guess. So in my opinion, I don't use this to determine what the future share price could be or what they should be trading at right now. Rather, I use this as an opportunity to estimate when I should buy this company. For instance, if the company ever fell below $9, that's when I would buy this company. Or if the company ever surged above $30, I would literally liquidate my entire position and take profits off the table. And that's how I use these overall estimates, but I would love to hear your thoughts down below. Next, let's talk about some great news that Palantir has gotten over from Ukraine. And a lot of people already know that Palantir has been directly cooperating with the Ukrainian military to fight against Russia. Palantir has been actively in cooperation with Ukraine, particularly their Ministry of Digital Transformation, because it's providing flagship products directly to the Ukrainian army, which means Palantir's technology can be battle tested, which is very good for the overall company. Ukrainian journalists were even able to find exactly how Palantir solutions are aiding the Ukrainian army, and they have written multiple articles about this. However, a lot of these stories went under the radar and were missed by Palantir investors, and I do think this is a great insight into just how potent Palantir's technology really is, especially during volatile times such as war times. The author also believes that even though Palantir's share price regarding their PLTR stock has surged over 20% in less than a month, he believes that there is further upside opportunity thanks to their heavy involvement over in Ukraine. And many investors and analysts agree with him that the growth story is far from over. Palantir's data has been heavily utilized, mainly due to providing satellite imagery services via meta constellations, and this allows Palantir to give the Ukrainians access to software that helps them better target Russian armor and equipment, as well as research and get some recon on occupied territories. Palantir's solutions are extremely useful on the front lines, and they are being actively utilized, which has caused other government businesses that are watching this war unfold to buy into Palantir Technologies. For instance, the United States military had a plethora of contracts with Palantir Technologies, but now we are signing new multi-million-dollar contracts with this company, and over in the United Kingdom and some countries over in Europe are also following suit, leading to even more contracts for this amazing company. If you want more insights on their latest news updates, feel free to go and read this article. I always link my sources in the description so you know where this information is coming from, but in general, Palantir has not only been surging in their overall share price, but they have had phenomenal news updates come out about them. Now let's address this more bearish negative article, but again, I don't have a lot of criticisms for this author because I think his claims are very fair. He says that Palantir Technologies has soared, which clearly is true. Just look at their overall stock chart. And this mainly happened after the company promoted their new artificial intelligence platform, or API, and since artificial intelligence has been hyping up a plethora of companies such as Nvidia, Palantir, C3.ai, and a few others, this makes sense why Palantir got a huge boost. Currently, Palantir Technologies is trading between $15 to $16 right now. Last time I looked, it was exactly $16 with around a $32 billion market cap. However, this author believes that this rally is artificial and Palantir is due for a huge pullback, which I personally would agree with. Now, this doesn't mean that Palantir will pull back and then start a long downtrend. It just means that once the company pulls back in their overall share price, they could then start another uptrend. And this is actually really healthy for a stock to pull back Otherwise, we could see it continuously surge and then completely drop off a cliff, which would be catastrophic for investors. I would much rather the company climb a little bit and then pull back and then climb a little more and then pull back and then climb a little more, rather than just surging up just to get absolutely decimated by short sellers and people taking profits. The author also correctly points out how Palantir beat their overall estimates regarding their revenues in their last earnings report, showing an 18% CAGR regarding their compounding annual growth rate or revenue growth rate, and they also brought in adjusted earnings per share of 5 cents. However, currently the company is forecasted to grow at around 16%, and this year they're anticipated to bring in around $2.2 billion. However, for quarter 2 specifically, Palantir is only guided to bring in around a 12% CAGR regarding their revenue growth, before reigniting that overall bullishness to grow by 20% throughout the next 2 years with the goal of reaching $3.2 billion. And you can see here on screen that these sources are backed by analysts, experts, and various professionals regarding these forecasts, projections, and overall financial estimates, which I find very accurate. So honestly, it looks like 2024 and 2025, this company is going to grow even more rapidly according to these projections than they did in 2023 regarding their revenue. This does not necessarily mean that their share price will follow the exact same trend that we've seen so far in 2023, which is why I would advocate to take some profits off the table, because the higher the share price goes, the more risky this particular stock becomes due to their accounting ratios, which we will talk about a little later. The stock clearly, according to this author, is running ahead of a reality in the overall short term, and honestly, I would agree with him on that particular point. Just look at what other professionals are saying about this company. Right now, the price target for this company is around $9.54 or $10, meaning that analysts are predicting a decline of around 36%, meaning that this company is overvalued right now. And they attribute the main reason for the company surging in the first place is due to AI hype, which eventually will deteriorate. Also, when we look at their accounting ratios, and here's where I personally find the greatest evidence, is Palantir trading at 14 times their 2023 revenue targets, meaning their PS ratio or PS multiple is very high. Ideally, I would want this below 10 before I started to invest into this company again. However, I do want to say some positives about this company that the author also highlights. The company has a boatload of cash on hand, coming in at $2.9 billion with a virtually no debt, strong free cash flows, and good adjusted profits, which is very impressive in my opinion. These are going to be key investor takeaways that you need to know. However, my main concern is don't get caught up in the AI hype. I don't know how long it's going to last, and I don't know how high Palantir's share price will go, but for me, the higher it goes, I am incrementally taking profits on the way up because I know a pullback literally is imminent. So I want you to be aware of that, cautious of that, practice proper risk management, take some profits off the table. For me, I've already removed my initial investment from the company, considering how the company has already doubled in price. And to explain this further, I'll use an example. Let's say I invested $1,000 in this company, and then the company doubled in their overall share price. So now my position is literally $2,000. So I took a $1,000 investment, and I have increased that to a $2,000 investment. I have now taken $1,000 as profit, thus regaining my original $1,000, which is very good risk management, meaning that the extra $1,000 that is still invested into this company, I can either let it ride completely with zero risk because I've already recuperated my initial investment, or I can continuously take profits as it goes up, and as I take profits, I'm going to save this money, so when it inevitably pulls back, I will reinvest those profits back into the company with virtually zero risk to myself since I've already regained my initial investment. So the rest of this money is literally just play money from here and pure profits. However, that's just what I do. Feel free to always make sure to do your own research because everyone has slightly different investing strategies, styles, and variables that they need to account for. Lastly, let's talk about Nio's Nio stock, which is an electric vehicle maker over in China. Like I've said before, this company is supposed to crash until we start to see the company ramp up in quarter 3 onwards, and that's not going to come out most likely until the quarter 4 earnings report. report. Recently, Nio shares have dropped by around 58%, absolutely decimating investors. However, today, Nio shares has bounced back by around 5.83%. So let's discuss exactly why that is. Nio has been one of the worst performing stocks over the last 12 months, falling by around 58%, reflecting the company's slower than anticipated growth, and the recent earnings report really didn't give us any good numbers. Currently, the stock trades for around $8, while very bearish negative professionals believe this company is worth around $6, and we have had multiple price downgrades recently for this company after their earnings report, but other investors and experts are still pretty positive about this company, thinking that it could surge to around $25. When we look at their PS accounting ratio, it is very positive, coming in at just 1.75, much cheaper than Palantir's 14 PS ratio, or a 14 PS multiple, which is extremely high. But then this begs the question, if their accounting ratio is so good, is this company worth investing into? And for me, it depends. In my personal portfolio, I do have a little exposure to this growth stock because if it does work out, it is going to be extremely promising. And I do see further EV growth and their ability to scale past Q3 of 2023. And we've even gone over how I predicted how the share price would crash and then eventually recuperate. And for me, I view this as a long-term play, meaning that I'm not going to sell until over the next decade. I do think Nio is very differentiated in both service and technology from their electric vehicle peers over in China, particularly revolving around their battery swapping technology. They also have very impressive electric vehicles, which are premium, and I do really like their battery as a service model. This allows people to essentially enter into a subscription model for their battery packs, eliminating upfront costs when they're buying an electric vehicle. However, like I've mentioned in previous videos, this is a long-term hold, so clearly it can fall even further in price during the short term or even over the next 2 years until they become profitable, hopefully in 2026 when they're projected to break even. The company has a boatload of cash on hand. However, experts are concerned how Nio could actually burn all of the cash on their balance sheet before they become profitable. Right now, they're sitting on around $6 billion worth of cash, and they are bringing in billions of dollars worth of revenue. However, they are not profitable yet, which is a big concern for investors. There is still reason for optimisms, and the author highlights 3 main reasons for this. First is a near-term catalyst to where they released their E6 SUV, which received over 30,000 pre-orders in just 3 days following the announcement of their launch back in May. On top of that, they also have a very diversified and an impressive range of different vehicles and vehicle options for people to buy, and this allows diversity and for people to buy cars that they like. This allows them to enter into a larger market, thus giving them more access to market share in these individual segments and a larger total addressable market. Lastly, the author highlights that their sedan output clearly is their #1 electric vehicle that they sell, because over in China, smaller cars are just more popular, which is exactly why they have seen their sedan deliveries increased by around 74% in May, up from 69% in March, up again from 56% that we saw back in December. So they are clearly scaling this overall segment, which is their most popular segment. On top of that, they are planning to build 2 more factories to increase their overall floor space and output, thus providing further economies of scale, more overall products in the forms of electric vehicles, and hopefully more sales. In the end, this is a very long-term play, meaning that I personally only have a 1% allocation to this overall company. However, I do think it is worth it because the upside potential for this company could be absolutely massive. But with that being said, I also own companies like Tesla and a few other EV makers, which are in my portfolio. But I would love to hear your thoughts down below about both Nio stock regarding their NIO shares and Palantir Technologies stock, ticker symbol PLTR stock. So I would love to hear your stock price targets down below. If you want more videos just like this one, don't forget to go and smash that like button, especially if you made it all the way to the end of the video. Don't forget to support me personally by becoming a member of this channel for as little as 99 cents. Subscribe for more videos like this one, and I will see you in the next YT video.